Hey everyone, welcome back to Corporate Decoder, the place where we decode the money moves of big companies today. We're diving into a filing from Ares Strategic Income Fund that's got some interesting financial news. And let's just say they're not afraid to take on a little more debt to fuel their plans. Think of it as a financial puzzle, and we're here to put the pieces together for you. Before we dive in, if you love getting clear, no-nonsense insights into corporate filings, make sure you hit that subscribe button. And hey, we've got a fantastic community over on Discord, linked in the description below, where we break down these kinds of stories even further. Alright, let's get straight to it. This report from Ares Strategic Income Fund, dated the 22nd of January 2026, is all about a significant financial move they're making. It is not a quarterly or annual checkup, but more of a special announcement about a specific event that impacts their financial structure. The company Ares Strategic Income Fund is letting the world know about a big borrowing deal they've just finalized. This isn't just pocket change, we are talking about a substantial amount of money they are bringing in. The core of this report is about an other event, and specifically it details their pricing for a new offering of notes. Think of notes as a way for companies to borrow money from investors over a set period. So here is the headline. On the 22nd of January, Ares Strategic Income Fund announced they are issuing $700 million worth of notes. That is a massive sum. These notes are a form of debt that will mature, meaning they need to be paid back in 2031. The interest rate on these notes is 5.55%. They've done this through a private placement, which means they're selling these notes directly to specific types of investors, like big investment firms that are considered qualified institutional buyers, and also to certain investors outside the United States. This is a common way for companies to raise large amounts of capital without having to go through the full public offering process. These notes have a specific maturity date of the 15th of April, 2031. What is interesting is that the fund has the option to pay back these notes early at any time. However, if they do, they might have to pay a bit extra, a make-whole premium, to compensate the investors for losing their expected interest payments. This gives the fund flexibility. The deal isn't completely done yet. It is expected to finalize or close on the 29th of January 2026, as long as all the usual requirements are met. This is standard procedure for any large financial transaction. Now, why are they raising all this money? The plan is to use the cash they get from selling these notes to pay off some existing debts they have under their credit facilities. A credit facility is essentially a loan or a line of credit from a bank or other financial institution. So they are essentially swapping one type of debt for another, possibly to get better terms or to manage their overall debt structure. And here is a key part of their strategy. After they use this money to pay down some debt, they can actually borrow money again under those same credit facilities. This new borrowing will be for their general business activities, which includes investing in companies they hold as part of their investment strategy. This suggests they are managing their debt strategically to free up funds for future investments. This section is a standard legal disclaimer. They are essentially saying that this announcement is not an invitation for everyone to buy these notes. It is just information. They can't sell them in places where it is not allowed by law. Another important legal point, these notes haven't been officially registered with the securities regulators. This means they can't be freely sold to the general public in the United States unless they go through the formal registration process, or if there is a specific legal reason they don't need to be. This reinforces the idea that this is a placement for sophisticated investors. This is a common section in these reports. It is basically a warning to investors. They are saying that some of the statements made in this report might be about the future, and those statements aren't guaranteed to happen. Lots of things can go wrong, and the actual results could be very different from what they expect. They also say they don't promise to update these future statements if things change. And finally, we have the signature section. This is where the company officially signs off on the report, indicating that the information provided is accurate to the best of their knowledge. Here we see the signature of Scott C. Lem, who holds the important titles of Chief Financial Officer and Treasurer for Ares Strategic Income Fund. His signature confirms that the company is formally submitting this report with the regulatory bodies. So what does all this mean for Ares Strategic Income Fund? They are strategically raising a significant amount of capital, $700 million, by issuing debt. This isn't necessarily a sign of weakness, but rather a calculated move to manage their existing debt and to free up cash for future investments. By refinancing their debt, they might be aiming to secure more favorable interest rates or longer repayment terms, which can improve their overall financial flexibility. They are essentially playing a long game, using borrowed money to potentially generate more returns down the line. However, taking on more debt always carries risk, especially if market conditions change or their investments do not perform as expected. The success of this strategy will depend on how well they manage their existing credit facilities and the returns they achieve on their new investments. It shows they are actively managing their balance sheet to pursue their growth objectives. What is your take on this debt issuance? Do you think it is a smart move for Ares Strategic Income Fund? Or does it raise concerns? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps us out. And make sure you subscribe for more corporate deep dives. And don't forget to join our Discord community, linked in the description, for even more in-depth discussions. Thanks for watching, and we'll see you in the next one.